Hello, everybody. I'm your host, Egbert, here at StopStrugglingNow.com. And today, we're going to talk about that Apple and Tesla split. So we're going to be talking about stock market news. And welcome. Stop Struggling Now gear. No fear, no excuses. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. We're going to talk about investing stock market, and especially because today this video is after the Apple, the Tesla split. So we're going to talk about it, and there's some things that has happened true to form, just what we talked about on the live stream yesterday. In case you've been missing the stock market news and the talk about the Apple split and Tesla split from previous videos, we're going to go over it. And as you can see, we're on the Stop Struggling Now YouTube channel page. And please share videos, help other people, because everybody can use a little bit of extra income. Over here you see the join button. We have a membership. So if you'd like to hit the join button and support the channel, please do so. I sent out a special message just for members only today during Apple and the Tesla split. And so there was a discussion about that. But I'm going to go over it aftermath for everybody right now. So we're going to get right into it. The Tesla split. Here's what happened today. And it's still rising. True to form. It started at what, 400? I believe it was 453 yesterday pre-market. So at 4 a.m., you could have bought the stock for 453. At 9:30 a.m., it was 444. So this morning, if you would have heeded the warning and said, hey, I'm going to go in here and buy me some shares of stock, and you would have had that Webull or Robinhood app, and especially Robinhood, since they allow you to do fractional shares, even if you didn't have the 440, you could have put in there $200, $300, $100, $25. You would have a rise of 12.57% on your money, and you can see what's happening in aftermarket. After hours, it's now over $500 in aftermarket. So again, it's rising more than 13% in less than 1 day, true to form after the split. And also true to form, remember I said usually during intraday trading the stock kind of goes down. Well, as you can see here, it took a little dip down here. It went as low as 441.90 is what you could have purchased it for this morning after around 9:40 a.m. That was the lowest point, so you could have gotten it low. And that's the thing, there's a trend that happens with these intraday tradings where it drops down a little bit. It barely dropped because in this age we have fractional shares, we have Webull, we have Robinhood, we have M1 Finance, we have E-Trade, we have TD Ameritrade. All have no fee trades, no commission trades. Back in the day, you always had to pay for your trades, whether it was $7, $10, $13. And then you, on the sell, you would have to pay again for the trade. So you wouldn't see that many people buying and selling in a given day. Whereas here, if something goes up 10%, somebody could have bought it at 440 this morning. At 440, let's call it 450. You could sell it right now for $500 per share. You would make $50 per share on your money easily. It's at 509 right now. So you could have made $55 or $60 on your money today per share. So you can see easily that people would then be able to buy and sell pretty fast without any fees these days. That is major, and that is what's happening, and that's why these things can grow like they're growing right now, and especially when there's an upside. So hopefully you got in on this today, but I just wanted to illustrate again, Tesla, Apple, Amazon, Microsoft, Nvidia, all these guys, autonomous driving, AI. Let's go with Apple. Same thing with Apple. You can see here, pre-market earlier, it was 125 at like 4 a.m. in the morning. Even if you bought at the opening at 9 a.m. But again, here we go. At 9:40 a.m., it dipped down to 126.90, 126.55. Apple has been going up, going down, going up, going down. It only moved 3.39% today. But again, no matter what you do, whether you bought up here at 130, at the highest point apparently today, 130, that does not matter. I think you should always buy during the split, especially on the day of the split. And then after hours, you can see it's dropping back down. 127, 128, 127. Now it's back up to 129. You could be taking advantages of these dips because remember, in a split, stock prices sometimes go up and down for the next 24 hours to 48 hours, and you can get some great deals. And that's what I always look for. So now it's after hours, and Robinhood and Webull, get your free stock down below. You can actually buy shares on Robinhood up until 8 p.m. Eastern time, and Webull is about the same time. And on Webull, you actually have to hit extended hours so the transaction will be implemented. So that's all you have to do. But on Webull, you have to buy the full share, let's call it $130. And on Robinhood, you can buy a full share for $130 each, or you can buy a share for 50, or a part of a share for $50. So again, Apple is illustrating just what happens normally in an intraday trading. Tesla's on a whole nother level because everybody wants to get in on the mad rush because they realize Tesla has an upside, and there's a lot of people talking crazy that their share price should be like 10 times, 20 times the value that it is. And so that's why they're doing it. In case you missed the live stream, the people that are members, I mentioned this on their special video today. In the live stream, a guy named Perry B, who was kind enough to join us, and he dropped a gem, and it, in my opinion, and it was called BLNT is the stock, and I believe that was it. Blink. Let's see if this is it. BLNT stock. I can't pull it up right now. That's kind of strange. But anyhow, maybe that's not it. Maybe it is it. But either way, that's pretty strange. I can't pull it up today. Let's see here. BLNK. There we go. BLNK. All right, I was misspelling it. Blink Charging. They went down today. And they do electric services, EV vehicle charging. And he mentioned that. In my opinion, I'm not a financial advisor. I'm not a financial stock picker or anything like that. But as you know, I've been what they call bullish. Bull goes up. Bearish. Bear goes down. So in this case, bull going up. I believe in EVs. Electric vehicle charging, EV batteries, the ingredients that you put in a battery, lithium, nickel, cobalt, things like that. Those are some of the things that you can invest in that would cost you a little bit of money. And in this case, I consider a stock that's under $10 a little bit of money. So I put some money into this today as well. And that's about the extent of my research I've done on the company, which is none at all. I just basically was like, they're EV, they're under that, I'll buy some shares. I don't really care about that. And so with that mentioned, I talk about Plug, who also does some things. They do hydrogen fuel cell systems to replace batteries, and they're trying to do vehicles powered by electricity. They have something to do with it. So I mentioned this on the live stream yesterday, where I also invest in Plug. Once again, anything that kind of has to do with the EVs and has to do with battery, I want to be in there, and I want to play with that because they should have a little upside, even though they could have a downside, but their downside should be a lot lower because more and more battery operated cars, vehicles come online, they're going to need these batteries and fuel cells and things like that. So hopefully we can ride that little wave. Now, as far as dividend stocks, one of my favorites is P, S as in Sam, E, C as in Charles, for everybody that's going to be on podcast. P as in Paul, S as in Sam, E, C. Prospect Capital Corporation is only $5. Well, it dropped down. Well, I'll just say what it is now. In after hours trading, it's $5.11. Their dividend yield at $5.10, which it closed at today, is 14% on your money. And they send you a dividend check every month. It's a monthly. You don't have to wait 3 months to get your dividend check. This is every month they sending you a check. I believe it's 6 cents per share that you own. So needless to say, 14% on your money, even at $5.10. And if you were lucky enough to buy this a few months back, when it was $3.82 or $4, that percentage rate was closer to 17-18% on your money that you invested back then. So with your blended investment, you could be earning 16%, 15% on your money, which is a hell of a lot higher than you can get almost anywhere else, and you're making money while you sleep. So this isn't going to be the only thing we're going to be talking about, because a lot of people are still sleeping on Amazon. Amazon has acquired some other companies, which has to do with cars, autonomous cars, artificial intelligence, because they have so much capital that they can spend $25 million and buy companies. They can spend $1 billion and buy companies. All right? So these are the kind of things that you have to think about. And so they're not only Amazon, as you see online, they're trying to be a technological company as well. And they're doing a hell of a job. They're acquiring companies in the tech space. And I'm not talking about cloud funding or cloud, cloud memory or anything like that. What I'm talking about is what I'm saying: artificial intelligence, EV vehicle support. In fact, tricycle and motorbikes, all kind of things that around the world people use that in America we don't use. Like a motorcycle, for instance, or a scooter, right? In America, you normally don't have that. But in other countries, a scooter is more valuable than a car, because they can get around and do. And then using that scooter, they're delivering products, goods, and services using the scooter. So now if you have an electric scooter, what's going to happen? Now you don't have to stop at a gas station. Now that scooter goes 500 miles a day. A person gets on there, does their whole day's work without having to stop for gas, stop for doing anything, any maintenance, and all this kind of thing. Start thinking about these things outside the box. These guys are buying, like Amazon owns Whole Food stores, right? You have to think about, they are so diversified, and seemingly every other month they're buying a company that diversifies them even more. So they're going to be here on the forefront for a long time to come. So you should be thinking about trying to get in on Amazon. There may come a time when prices do drop another 10-20%, because let's face it, everything can't keep going up forever. And there might be a time when you can get in, or you can get in right now, because they just keep rising as well. Now, let's talk about dividends again. Somebody that I have mentioned before is Gladstone Commercial Group Real Estate Investment Trust Company, G as in George, OOD. And you can earn 7.66% on your money. And today it went up to 19, and for some reason after hours it's $18.70. So since they're at $19.61 at close, at $18.70, almost $1 less, that means if you bought now after hours, your dividend yield is going to be around 8%. It's going to go up a little bit because the price went down. So that's how it works. When the price goes down, your dividend yield goes up. All right? Because basically you take whatever the dividend is, and then you divide that by the share price, the stock price. And then that gives you your percentage that you're earning on your money. So the lower the price, and as long as the company still gives out the same amount as far as the dollar amount of the dividend, then your dividend yield will rise. All right? Let's see what else. And my number one that I always tell people to look at is AT&T. AT&T is trying to spin off their DirecTV unit, which is an albatross around their neck as far as I'm concerned, because AT&T, dishes, unless you're out in the middle of nowhere, literally almost have no advantage these days, especially with streaming services, especially with Netflix, Hulu, and all these online services that have come out. You can get TV for a lot less, so it just makes sense that they should just spin that off. There's no reason to really have that. The AT&T has their own streaming service. In fact, they even own like Warner Media. This is kind of crazy. so they can actually do whatever they want in the media space or streaming service. So I would, just like everybody, get rid of it, give us our 30-40 billion, and let's move on. Meanwhile, they give out 6.98% dividends, and they've been giving dividends out for like 20 some years. Right now it's $2.08 a year, so every 3 months you get like 52 cents per share. So again, this is just a stable one that I recommend. It's 6.98%, 7%ish. So again, I always say do this one first. Another split that's going to be coming up is Trex. Trex is a builder that actually does decking. And so I shouldn't say really a builder like you would think a home builder, but the decking that you build, decks on the back porch, they use recycled materials. This is going to come out to be a thing of the future as well, because all this plastic waste, all the waste that we have, if you can figure out a way to recycle it and reuse it, which is what Trex does, then you got something going on. And so Trex has something going on, and again, they have a split that's coming up. So they're at 150, let's call it 149.49 right now. Trex is T as in Tom, REX. All right, that's the stock symbol. They're at 150. They're going to split 2-to-1. So that means all their shares roughly are going to be $75 per share. Now, the thing about Trex is pretty interesting is, here we go with the split history on Trex. I'll have a link down below so you can check out this splithistory.com for Trex, and it'll go directly to Trex. But look, they split in 2014, May 8th, 2014, June 19, 2018, and here they are doing another split 2 years later. Another 2-for-1 split. They basically have split three 2-for-1s in 6 years. Now, here's the thing that I want to show you. This is very interesting. Unbelievable. If you would have put $10,000 into Trex, this is always hypotheticals, but if you'd have put $10,000 into Trex, August 31st, 2010, 10 years later, it'd be worth $297. $297,000. Can you believe that? That is incredible when you start thinking about it. And most people don't even talk about Trex. But Trex builders use their products because people got tired of putting, you put down a deck at a house, then they say you got to stain it, right? Then after the stain wears off after a few years, now you got to go sand down, do all this maintenance and upkeep. Meanwhile, you could have just got a Trex product that you don't even have to bother with for the next 10, 15 years. So this is why over the course of time, they're still building houses. There's always going to be housing builders, and there's also going to be renovation and rehab. So when you renovate a deck, why are you going to put in a 2x4 pressure treated wood that you're going to have to treat and put stain on and deal with all that when you can just go down and get some Trex, and it almost costs the same price or less? When Trex first came out, it cost more, so it didn't make sense. But now that more people have it and the price is coming down, now more people can afford it. Why put in a deck like that when you can put in a deck that you have to do no maintenance on? Time is money. Why are you going to be out there wasting money and time with the upkeep of a deck that's outside? Come on. So anyhow, I just wanted to bring this in. They do not give dividends. So this is just a straight stock play that you're going to keep this stock for a long time if you decide to buy Trex. So that's pretty much it, ladies and gentlemen. I just wanted to make this short and sweet because today we had an Apple split, the Tesla split, and I just want you to keep your eyes on the next split by Trex. All of these companies are great for the upswing, in my opinion. So this is why I had to bring it to you, because that's what we're trying to do here. Financial literacy. We want to be CEOs of our life, right? This is what you have to do. You have to invest for it. Ends up being so great that you find out after 5 years go by, 10 years go by, no matter what the stock market does, when they go up, when they go down, when they go down again, the 1%ers don't lose. They figure out a way to make certain stocks, certain sectors of the economy go up. And long as you have a broad spectrum and diversity of your portfolio, you may have one sector go down, like for instance oil right now, right? Sooner or later, if EV vehicles came up where they started to take over, clearly oil would start going down. Gasoline companies may be going out of business. So you have to think about what's happening for the future and for long term, and that's what you think about it during investing. And somebody asked on the live stream, out of curiosity, not really curiosity, but on the live stream, they were asking, hey, how do you know what's going to happen tomorrow in this S&P 500? And so I basically said, well, nobody really knows what's going to happen. All you can do is take an educated guess. But I said, hey, go over to money.cnn.com and you can see the pre-market trading overnight and after hours. After 4 p.m. Eastern time, it keeps updating because there's the futures. And so later on at 11 p.m. at night, these numbers may change. At 4 a.m. in the morning, the numbers could be positive, for instance. So these are the kind of things that people who invest in the stock market, they look at and then they say, oh, okay, I'll go see why this is going up or why these are going down and what's going on. So these are the kind of things and the kind of tools that you would use if you're going to do it. Or you can be like a lot of people, set it and forget it. Buy some shares of Apple, buy some shares of AT&T, buy some shares of Tesla, buy some shares of Google, buy some shares of Amazon, buy some whatever other your favorite, like I said, Nokia and Ericsson, like that's what I have. And then you just say, okay, set it and forget it. I'll look at whatever I invested, whatever amount. I'll just check it out 6 months from now or a year from now. Because the idea is that you want to hold these for long term. All right? So with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. And that's why you have to always think about where you're going to put your money at. This is why you have to think about investing. If you're not going to invest in the stock market, then invest in a good book that can help you out financially. If it's not going to be a good book, then invest in education. If that's not going to work for you, then invest in your time on the internet. Either way, you have to invest in yourself. You're the CEO. And with all that said, keep your head up, keep moving, and I'm out.